First mover Asia, Bitcoin opens week defending $30,000 support level. Plus, the dYdX Foundation's Charles DeHassey says that dYdX's move away from Ethereum might be the beginning of a broader trend. Good morning. Here's what's happening. Prices. A Bitcoin ETF might be a divisive idea for some in the industry, but it's all the market has on its mind. Insights. The dYdX Foundation's Charles DeHassey talks about the future of the platform post-Ethereum and what he sees as developing regulatory trends. Prices. Bitcoin opens week defending $30,000 support level. A Bitcoin ETF is the only thing on the market's mind. BlackRock CEO Larry Fink's embrace of Bitcoin, an about-face for the finance executive, is dividing analysts and the industry at large. So-called mainstream adoption will bring waves of new entrants to Bitcoin, and the risk is that they won't care and won't protect the decentralization properties that make it valuable over centralized alternatives in the first place, Alex Thorn, head of research at Galaxy, wrote last week in his report. But the market at large doesn't seem to mind not caring about the nuances of decentralization. The world's largest digital asset continues to defend the $30,000 mark, opening Asia's trading week at $30,171. Ether is also holding above $1,800, trading at $1,863. In a largely uneventful week, we saw Bitcoin trending downward to test support levels near $30K, Bitbull Capital's Joe Pasquale said in a note to CoinDesk. However, the market leader managed to defend the key level despite news of the SEC calling ETF filings inadequate. BlackRock has refiled its application, and Pasquale says the market awaits more clarity around this development. We still maintain that continued trading above $30,000 will see more attempts to go higher. Meanwhile, $27,000 remains a strong support for now, he said. Looking ahead to later this week, the market will have its eye on inflation numbers and jobless claims, two figures that the Fed will consider when making its next moves on rates. Expect crypto to trade accordingly. Insights. dYdX Foundation CEO calls move to own blockchain from Ethereum a prelude. dYdX announced last year that it was leaving Ethereum for its own proprietary blockchain, Cosmos, over concerns about the scalability of the blockchain. In early April, the exchange announced it had launched a V4 of its private testnet, a pivotal step in its roadmap. In a recent interview with CoinDesk at the IVS crypto conference in Japan, Charles DeHassey, the CEO of the dYdX Foundation, explained the move by equating it to tech sovereignty. Having its own blockchain, he explained, allows dYdX to control its full tech stack and not depend on the speed and trade-offs of Ethereum's roadmap. When you sit on someone else's blockchain, you have a dependency on their roadmap. It's not yours, he told CoinDesk. By having our own chain, we are able to execute much faster by moving away from a general-purpose blockchain. dYdX isn't a new platform, but there's renewed interest in it as the Securities and Exchange Commission (SEC) goes after its centralized counterparts. The platform isn't without its growing pains, and the question at the end of the day will be if its new technology stack is the cure. Its token is down roughly 6% in the last month as the price of Ether is up 1.3%, meaning the market is taking a cautious look at this as the exchange prepares for its next chapter. Part of broader trend. DeHassey views dYdX owning its own blockchain as part of a broader trend where major crypto applications are optimizing for specific uses, thus making general-purpose blockchains less suitable. At the beginning, you start with a Swiss knife, doing everything, but eventually, you want to become a craftsman and have specialized tools, he said. So I think we'll see a lot of application chains and more interconnectivity between blockchains. But this doesn't mean that dYdX will be centralized around its own chain. DeHassey also highlighted that dYdX is blockchain agnostic, continually evolving and upgrading its technology. He believes this kind of adaptability is a key characteristic of successful decentralized finance applications. dYdX's new blockchain will be open for other platforms to build on, but DeHassey pointed out that it's specifically designed for its own uses and likened it to a Formula One for decentralized finance. Diversity of validators to prevent centralized failure. dYdX aims for diversity among their validators and geographies, underlying service providers, and types of providers. DeHassey foresees a rise in domestic validators due to certain regions lacking regulatory clarity. We work on this to make sure that we've got a diversity of geographies, diversity of underlying service providers, a mix of cloud providers, a mix of what we call bare metal providers, he said. DeHassey predicts that in the coming years, regulations may require financial institutions to access public networks via domestic nodes in order to ensure that activities on-chain fall under the purview of local regulators, which will significantly increase the demand for domestic validators, which means regulated crypto derivatives trading if you're in the right part of the world. Important events, 9:30 a.m. HKT/SGT 1:30 a.m. UTC, China Consumer Price Index June/YY/MO M1 p.m. HKT/SGT 5 a.m. UTC, Japan Economic Watcher Survey June/current and Outlook 3 p.m. HKT/SGT 7 a.m. UTC, China M12 Money Supply June/YY CoinDesk TV. In case you missed it, here is the most recent episode of First Mover on CoinDesk TV. Binance's CZ brushes off news of execs leaving. Bitwise CIO on spot Bitcoin ETF race. Fortune reports at least 3 executives left Binance as the company prepared to defend itself on multiple fronts. Fairlead Strategies founder Katie Stockton shared her crypto markets analysis after the June U.S. jobs report was released. Bitwise CIO Matt Haugen and Ether Capital CEO Brian Mossoff weighed in on the spot Bitcoin ETF race. And Horizon CEO Rob Vigliani explained why the self-described Layer 0 blockchain was shedding its privacy coin moniker. Headlines: Coinbase knew it may have been violating the law prior to the SEC's lawsuit. Regulator claims the SEC pushed back against a previous Coinbase filing which argued that the regulator did not have sufficient jurisdiction to bring a lawsuit. BlackRock CEO's turnabout on Bitcoin elicits cheers. Skepticism of crypto cred. Larry Fink, CEO of the world's biggest asset manager, says crypto could revolutionize finance, endorsing an industry he once viewed with skepticism. But the very nature of an ETF is at odds with the original ideals of Bitcoin. Three Arrows Capital. Liquidator may try to claw back about $1.2 billion from DCG BlockFi. A July 7 report from Teneo, the hedge fund's liquidator, described the potential claims. Binance feels strain of world's regulators leaping into action. This week's Australian probe, which sought out Binance employees outside the office, is only one of a growing list of legal entanglements facing the world's biggest crypto exchange. The real use case for CBDC, dethroning the dollar. Central bank digital currencies will revolutionize how companies settle international trade and reduce the need for greenbacks in the world economy, says Michael Casey.